Hey guys, it's Jen.
Brian.
Tammy.
And I am super curious, Tammy.
Okay.
Super curious because I ask all these questions. They're very prying.
Mhm.
What happens, I know you're gonna laugh, right? What happens when you have someone who comes in and they are like really not qualified for a loan? Maybe it was their credit, maybe they have come out of like a bankruptcy and they're not quite clear of it yet. We as the real estate side, we can't talk about it with them because that's not our position. We might not even know about it. So that's why we obviously send them to our fantastic lender partners like you. So what do you guys do in those positions? Like what does that conversation look like?
So that conversation, initially we'll have someone come in and put in an application, we'll pull credit, we'll look at their documentation. And like you said, typically qualification issues surround credit problems. It could be income, it could be what we call debt to income ratios, which means you've spent just a little bit too much on the credit cards and maybe the auto. And so you need to tweak some of those things in order to be able to qualify. And it's good to get with a lender to be able to figure that out sooner rather than later, because sometimes, especially with credit issues, what you need is time between the issue and when you're ready to buy, and that's really all you can do. Sometimes it can make sense to pay down some debt. What I encourage people to do is not try to self-direct that type of thing, because you can end up spending money unnecessarily that could have been used for a down payment or closing costs because you've decided I'm going to pay down all my debt and that's what a lender is going to look for. With leveraging a loan consultant such as myself, I can assist you in what makes sense as far as credit, what makes sense as far as employment. You know, typically lenders are going to look for 2 years W-2. If you're self-employed, you're going to need 2 years worth of taxes in order for us to see what kind of income you have. Foreclosure, that sort of thing, that falls into very specific guidelines on when you would be ready, and it's better to know now instead of later when you're trying to buy.
Thank you very much for that. I'm going to pry one more second,
Okay.
because I'm, again, very curious about the credit question. So I feel like some people think that they have to have like a upper 700s credit to qualify for a loan. Is that correct?
That is not correct. Of course, the higher your credit score, the better you're going to get premium loan rates. But to be honest, anything over a 740, 760, you're really not getting a better rate than anyone else. So It's the law of diminishing returns, I consider. But we certainly can service people that have credit scores at 580.
Okay.
Some mortgage companies can go even lower than that. It's just the appetite of risk for that particular mortgage company that wants to accept that certain credit score. Now, given you may have to do some additional things, you may have to put more money down. You may have to have more what we call reserves, meaning if you weren't able to pay your mortgage, do you have 3-6 months in order to cover that? If there is a life event that prevents you from doing so. But you do not have to have perfect credit in order to purchase a home.
So I think we just debunked another myth.
Yeah. Boop.